And my view is this space goes from 2.5, 3 trillion now. By the end of this cycle, it's 10 to 15 trillion. By the end of, let's say, 2032, just extrapolating the normal log trend of this, it's $100 trillion by 2032. That from here is $97 trillion of wealth that is going to come. This is the largest, fastest accumulation of wealth in all recorded history. Let's assume I'm a total moron, which is a good thing to do, and I'm wrong by 50%. It's still a $50 trillion wealth accumulation. That is the entire history of wealth accumulation of the S&P 500 and its market cap. So the amount of wealth that's going to get generated is going to get recycled into the space. People will buy high-end property in nice places, but a lot of people in this space won't go outside of this space, and it gets recycled, whether it's VC, whether it's the opportunities of building the applications layer, but really people seek trophy assets. And so I've just been buying as much trophy assets as I can for a kind of long 10-year time horizon, because I think this is the last chance you'll ever get to buy this stuff at the kind of prices it is.
Raoul Pal, the CEO of Real Vision, shares his insights about the cryptocurrency space's potential growth and wealth accumulation within it. He mentions significant trends that predict that the total value of the cryptocurrency market could reach $10 to $15 trillion by the end of the cycle, possibly by 2032. He emphasizes that even if his estimation is off by 50%, it would still result in a significant wealth accumulation, possibly around $50 trillion. He believes this wealth accumulation in cryptocurrency will be historic, potentially surpassing all previous recorded instances. Pal suggests that this wealth will be recycled within the cryptocurrency ecosystem, with people investing in high-end properties and other assets within the space. He advocates investing in what he calls trophy assets within the cryptocurrency space, as he sees it as a unique opportunity that may not come again. Pal urges people not to overlook the potential of cryptocurrencies and to consider investing in them before missing out on what he sees as a significant opportunity. We will now show you more clips of Raoul Pal as he provides more important insight into the state of cryptocurrency. Please take some time to like this video and subscribe to the channel to show your support. Thanks and enjoy.
You can see there's a shortage of dollars around the world, right? We lost US banks, we lost a giant Swiss bank, we're losing dollar yen, right? That's a shortage of dollars. And we've got Yellen going to China twice, right? She's there because her other job outside of getting Joe elected is to sell bonds. She's the Mike Milken selling junk bonds, going to China doing the roadshow. China's like, yeah, we'd love to buy your bonds, but we don't have any dollars. So you give us dollars and we'll buy bonds. So they have to figure out how that can be done. Now, nobody really wants to give China direct swap lines. They probably do it through Japanese bond intervention, by currency intervention. Either way, the G20's coming up or G7's coming up. There'll be some magical allowance for everybody to have enough dollars for the system to move forward and everything to happen. So there has been no independence since 2008. I think I don't think there's much independence between central banks either. I think the BOJ kind of taught everybody the trick. Everybody's followed suit. They've all got the same problems, which is the debt and the aging populations, and everybody plays the same card. And there's, the BOJ and the MOF, that they stopped being independent in the 90s, even though on paper they are. And so it is all driven by the Treasury and required to refinance this debt since 2008. I think the biggest risk we're about to take for, let's say, 3-year risk is a ridiculous bubble. I think there is a growing, big, huge possible narrative of having a 1999 style bubble. I think if there's a risk of that, then you get an overhang, and you could skip a crypto cycle, you could skip a tech cycle like we did back in 2003 to 2007 or something like that. So that's the biggest risk. I think all left tail risks have been removed, all of them. I actually personally believe that China and the US are agreeing or have agreed to negotiate Taiwan in exchange for Taiwan semi. There's no other outcome that can happen without them going to war. And actually, they can't afford that war. Nobody can. I've been observant of Gavin Newsom and that weird trip to China. Now, Gavin Newsom going to China, normally he'd be met with somebody lower down. He meets with Xi. There is only one reason he's coming with the gift. The gift is, let's talk Taiwan. Then Gavin brings Xi back to the United States. When they're saber rattling at each other, Xi suddenly turns up in San Francisco, of all places, not even DC. And Newsom is geopolitically squeaky clean. He's not involved in anything. So he's gone there like, I've got no beef with you guys. I'm just a tech guy here over in California. Let's talk Taiwan semi. Let's talk Taiwan. And the US is building 3 Taiwan semi plants. Germany's building 1. Japan's building 1. They're probably all built within the next 4 to 5 years. Then everybody's got the technology that can be shared. And I believe that if they say to China, listen, let's organize something here. You can have Taiwan and Taiwan semi. We'll split Taiwan semi. We'll go our own ways, split AI amongst 2. When you follow that through, it's been interesting. Then she did a little tour of Europe and met all the, met Macron and others there. They need to warm up this whole equation. What does Europe want the most? It's really interesting when you follow this. What does Europe want the single most? Is Russia out of its doorstep. What happens? She goes straight back from France. First meeting, Putin flies straight over to see him, comes back and says, yeah, we were wrong. It wasn't the Ukrainians who bombed the concert hall. It was ISIS. Now, everyone can blame ISIS. It's like the bogeyman. You're politically allowed to say ISIS to anything. So that was interesting. And then he started leaking that we're prepared to negotiate not expanding territory in Ukraine, and we'll call it a day. That's the single most important thing to the Europeans. So I have a feeling we have a probability that is increasing that we've reduced the biggest left tail risk in the world, and nobody yet knows this. And if that's the case, that's going to ignite a super bubble. So there you go. There's part of my grand thesis.
Powell continues the interview by discussing shortages of US dollars globally. He points to cases where major banks, including US and Swiss institutions, have faced difficulties, further tightening the dollar supply. He also mentions Treasury Secretary Yellen's trip to China, hinting that selling bonds to China, known for their appetite for US dollars, might be part of the agenda. Powell argues that the 2008 financial crisis led to a more interconnected world of central banks. He suggests the Bank of Japan's actions influenced policies at other central banks, potentially compromising their independence. While acknowledging potential dangers in the cryptocurrency market, like a speculative bubble mirroring the dot-com crash in 1999, Powell believes most serious risks have been addressed. He suggests talks between the US and China, particularly regarding Taiwan and TSMC, could significantly ease geopolitical tensions. He argues central banks are more interconnected and sees reduced geopolitical tensions as potentially triggering a super bubble in financial markets. Let's continue to hear what Raoul Pal has to say.
To do absolutely nothing has been the best play of all. Just, I'm like 90% Solana. It's been the right bet to have over the cycle so far. The only play I've done this year in any meaningful size was I took top slice Solana as it was coming from 150 over to 200, top sliced it and started buying the high end of NFTs. So I bought pretty much every single Beeple I could possibly buy, and then I bought every single X copy I could afford, building a long-term portfolio. These things were quite beaten down, and my view is this space goes from 2.5-3 trillion now. By the end of this cycle, it's 10 to 15 trillion. By the end of, let's say, 2032, just extrapolating the normal log trend of this, it's $100 trillion by 2032. Yeah. The banana zone is something that both Arthur and I talk a lot about. It's that point in the cycle where liquidity comes in, where central banks need to refi all of the debt. It's when politicians bribe the people with plenty of candy. It's that moment that crypto tends to go vertical. And it's very cyclical. It's driven by this macroeconomic forces of this debt refi cycle. It affects all the asset prices over the time. But crypto is the one that goes truly bananas. So again, the simplest way is don't fuck this up. So just have a core portfolio, the big stuff. But if you get the other stuff right, you can make a lot of money in the other stuff. The 10, 20% of your portfolio, there's a bit more degen. That's when you're going to see some really interesting stuff. Now, if you go back to the classic banana zone from the last cycle, that's when Solana, Avalanche, Luna, and Matic came. And the performance in 1 year out of those 4 tokens was insane. We're going to see that repeat. Who's it going to be? What's it going to be? I don't know yet. But that's a game to be had in the banana zone. And it's part of the fun that you can actually degen in and feel like you've really nailed something. Because really most of the game is just doing nothing and just letting it all play out. Part of that is, I mean, if there's any volatility, maybe one of those two drops out. There's violence is obviously likely to happen at some point in this, just because of how divided the society is. But when you narrow everything down, the outcome for everything is printing money. So the worse anything happens in the US, the more likely they are to print money. So election years tend to be very, very positive, and the year after for risk assets, just because everybody's buying votes and then kind of proving themselves afterwards and mopping up the pieces and paying that interest on the debt. So there's that military side. You've then got all the retirees with the baby boomers with all the votes. Well, they want their healthcare. And then the third part of the equation is somebody needs to pay the interest on the debt. And the only way of doing this is the magic money printer. But 90% of the entire option market is a deribit. That's the entire option market of crypto. Billions and billions of dollars. There's a risk there. There's a risk there because the amount of people who use that one counterparty as the centralized place for options, all the OTC options get laid off there. So that's another risk factor. We need more option houses, some exchanges, platforms, everything, just to stop concentrating it, because there's a lot of use of derivatives now in that part of the world, and we don't know who's going to end up holding the baby when it blows up.
What factors do you consider most important when evaluating cryptocurrency investments? How do you balance the opportunities and risks in this rapidly evolving market? We would love to know. Share your thoughts in the comments section. If you found today's video informative and would like more insights and updates on cryptocurrency and global finance, please consider liking the video, subscribing to our channel, and enabling post notifications. Be sure to stay tuned for our next episode, where we'll uncover more about the fascinating developments in the crypto space. Until then, keep questioning, exploring, and most importantly, investing wisely. Thank you for watching, and we look forward to seeing you in the next video.